In late 2025, China stopped exporting silver and sulfuric acid, sending shockwaves through global markets. Silver is vital for electronics, solar panels, and medical equipment, not just jewelry or coins. As a top supplier, China's move left countries and companies worldwide questioning their silver supply. This policy highlights how crucial natural resources are in global politics and business. Understanding China's decision shows just how connected our world really is. China is a giant in the world of silver, one of the largest producers and exporters. Many countries depend on China for a steady, affordable supply. Today, silver is mostly valued for its role in industry, especially in technology and clean energy. Any change in China's silver policy has a huge impact on global markets. If China exports less, prices can jump and production can slow down worldwide. China isn't just another player. It's a key link in the global silver chain. China's export ban is not just about silver. The government has also stopped selling sulfuric acid, a chemical that may seem unrelated but is actually crucial for mining. This two-part restriction hits the silver market from more than one direction. First, the direct silver export ban means that less silver leaves China. This reduces the amount available for the rest of the world. But China also uses another, more indirect method. By banning sulfuric acid exports, it makes it harder for other countries to mine copper. Why does this matter for silver? Because most new silver is actually found as a byproduct when mining copper. Without sulfuric acid, copper mines, especially in countries like Chile, can't run at full speed. This leads to less copper and, as a result, less silver being produced globally. It is a clever way for China to influence the silver market without directly saying no to silver exports alone. These combined actions, direct bans and cutting off key supplies, show how powerful a country can be when it controls both raw materials and the chemicals needed to process them. Other nations are left scrambling to find new sources or pay higher prices. Sulfuric acid is a simple but vital chemical. It is used to process copper ore, and copper mines are where most silver is found today. Without enough sulfuric acid, copper production drops. And when copper production drops, silver becomes even scarcer. Chile is the world's largest copper producer. Its mines need huge amounts of sulfuric acid, much of which used to come from China. When China stopped exporting this chemical, Chilean miners faced a crisis. They could not get enough acid, so they had to slow down or even halt some production. That means less copper and less silver for global markets. This problem is not easy to fix. Building new sulfuric acid plants takes time and money. Finding new suppliers is also hard because global supplies were already tight after earlier conflicts and trade issues. As a result, Chile, and countries like it, find themselves caught in a squeeze with few good options. The situation in Chile shows how one country's policy can create problems halfway around the world. It highlights the hidden links between chemicals, mining, and the metals that power our modern lives. The immediate effect of China's actions has been a sharp rise in silver prices. When supply shrinks and demand stays high, prices go up. This is basic economics, but the results are far-reaching. Manufacturers who use silver in electronics, solar panels, and medical devices are now paying much more for the metal. Some buyers, especially in China and India, are offering prices well above the global average just to secure enough silver. This creates a scramble with companies trying to buy up what little is available, driving prices even higher. For small companies, these costs can be hard to manage, and some may even have to shut down production lines. Industries that depend on silver are feeling the pressure. Electronics makers, solar panel producers, and even car companies are all affected. Higher silver prices can mean more expensive products for consumers, or even shortages of key goods if factories cannot get enough metal. Everyone from jewelry makers to tech giants is watching the market closely. The fear is not just about today's prices, but about what could happen if the shortage gets worse or lasts a long time. Silver is now seen as a strategic material, much like rare earth elements. In the past, China used export bans on rare earths to gain leverage in trade disputes. Now, countries like the United States have added silver to their critical minerals lists, recognizing its importance for industry and security. The lesson is clear: relying too much on one source for critical materials is risky. Countries and companies are now rethinking their strategies for a more resilient future. Governments, industries, and investors are all reacting to China's silver export ban. Some countries are calling for more domestic mining and chemical production. Others are looking for trade partners outside of China. Investors are watching silver prices closely, trying to predict the next big move. Many experts think the high prices and tight supplies could last for a while. It takes years to open new mines or build new processing plants. In the short term, countries like Chile may struggle to keep up production, and industries may have to pay more for the silver they need. The world is also watching to see if other countries will follow China's lead, restricting exports of their own key materials. If so, we could see even more supply chain shocks in the future. For now, everyone agrees. What happens next in the silver market will matter not just for investors, but for people everywhere who rely on silver-powered technologies. This story is about much more than metal. It is about how choices made in one country can affect people and industries around the world, and why keeping supply chains strong matters for us all.